Good morning. I'm Paul Martin from Martin Healthcare Advisors, and we're here back again talking to you about the rehabilitation market. And today what we'd like to share is reasons that we believe that the rehabilitation merger and acquisition market is truly heating up, and that we will see significant activity in mergers and acquisitions in the rehabilitation industry over the next 2 years. I just got off the phone with yet another rehabilitation industry regional buyer who is interested in looking and seeking acquisitions in the South region. And these calls are coming to us, multiple calls like this are coming to us on a weekly basis. Yet when you talk to most business owners, the sentiment in the industry right now, and in most industries, is that this is not a good time to sell your business due to poor economic conditions, the real estate crisis, the stock market drop, and all these factors would contribute then to poor multiples, poor pricing, and poor structures. To the contrary, we are seeing rehabilitation businesses being sold for over 5 times earnings, and in a recent deal that we closed, a company was sold for close to 6 times earnings and over 2 times its revenue, and the overall deal price was $13 million. So we are seeing certainly an increase not only in activity but also in the structures and prices with this activity. So given the economic conditions and given the real estate crisis and given some of the other factors in the industry, why are acquirers right now interested in purchasing rehabilitation businesses? Well, first of all, we did a survey of all of the rehabilitation buyers back in January, and there were over 15 acquirers that responded that they wanted to do not only one acquisition in 2010 but multiple acquisitions in 2010. And that they felt as though their activity would begin to strengthen towards the last 2 quarters in 2010. And that's due to the fact that we are going to see a significant increase in capital gains. As of January 1st, 2011, capital gains will be going up 5%. So the sentiment from the buyers is that there may become more sellers in the market as of the 3rd and 4th quarters. The type of businesses that they're looking for within the rehabilitation market, I think there's 3 primary factors. Number one is that most industry buyers, whether it's a financial buyer or a strategic buyer, they have an interest in an ownership and a management group that is willing to stay in place for a period of time after the acquisition. Secondly, looking for companies primarily in a size range of 3+ clinics, or in a range of about $2 million in revenue up to about $50 million in revenue. And third is that they are looking for businesses with a fairly healthy payer and diverse referral base. What I mean by healthy is that the business is not completely predicated on one payer, and with their referral base is that there's no one referral that represents a significant percentage of the overall referrals. So in the next few segments of our Martin Healthcare Advisors rehabilitation information, we're going to be sharing with you how to prepare for the event of a sale, and whether your interest is to sell your business this year, next year, 5 years, or even 10 years down the road. It is never too early to prepare for the sale of your business. And the first thing we're going to talk about in our next segment, and what we believe is paramount to that preparation, is to how to value your rehabilitation business. And once you have an understanding of that value, we can then look to what are the value drivers that will drive the business and increase value. I think I've said this before, 90% of businesses in America are adding absolutely no value to their business year over year. We don't want that to be you, and so we're going to teach you in the next few segments how to add significant value to your rehabilitation business. Thanks, and have a great weekend.